Hello everyone, welcome back. Today we are comparing the first quarter results of financial year 2026 for four important NBFCs in the affordable housing and SME lending space. The companies are Home First Finance, India Shelter Finance, Mass Financial and SBFC Finance. Let us find out who outperformed this quarter. Quick introductions. Home First Finance is a fast-growing affordable housing lender. The company recently raised 1,250 crore rupees through a qualified institutional placement and also received a credit rating upgrade. This gives it a strong capital base for future growth. India Shelter Finance is a rising star in affordable housing finance. It delivered the fastest growth in this quarter with industry-leading profitability and is rapidly expanding its branch network. Mass Financial is the seasoned player here with more than 30 years of history. It focuses on MSME lending, showing steady growth, conservative risk management, and consistent compounding. SBFC Finance is a diversified lender, scaling up through SME and gold loans. It reported solid growth but continues to face asset quality pressures in the lower ticket borrower segment. Performance comparison. Let us begin with growth. India Shelter posted the strongest numbers, with profit after tax up 43% year-on-year and assets under management growing 34%. Home First was not far behind, with profit up 35% and AUM up 29%, supported by its large capital raise. SBFC delivered profit growth of 28% and AUM growth of 30%, with gold loans boosting yields. Mass Financial grew more moderately, with profit up 19% and AUM up 20%, reflecting its steady but conservative approach. The growth champion. This quarter is India Shelter Finance. Now, profitability. India Shelter once again leads with a return on assets of 6% and a return on equity of 17%, clearly best in class. Home First delivered return on assets of 3.7% and return on equity of nearly 15%, with potential to move higher. SBFC reported return on assets of 4.5% and return on equity of 13.5%. This is healthy, but not the highest. MS maintained return on assets of 2.8% and return on equity of 14%, reflecting its conservative stance. The profitability leader is India Shelter Finance. Next, asset quality. India Shelter has the cleanest book, with gross non-performing assets at 1.2%, though there was a small uptick in early delinquencies. Home First reported gross NPAs of 1.8%, with only a seasonal rise in collections. Mass Financial stood at 2.5%, stable but higher in commercial vehicle loans. SBFC had the weakest asset quality, with gross NPAs of 2.8% and higher credit cost. The asset quality leader is India Shelter Finance. Finally, let us look at capital strength and strategy. Home First is in the strongest position here, thanks to its 1,250 crore rupee capital raise, a capital adequacy ratio of nearly 50%, and a recent AA rating upgrade. India Shelter continues to expand aggressively with 290 branches and digital underwriting. Mass remains steady, balancing its MSME focus with retail expansion. SBFC is diversifying into gold loans while tightening credit filters to manage risk. The capital strength leader is Home First Finance. Final verdict. So, who is the winner this quarter? Overall, India Shelter Finance takes the lead, with the fastest growth, the highest profitability, and the cleanest asset quality. Home First Finance comes in a strong second, with massive capital strength and digital innovation supporting its growth. Mass Financial continues as a steady compounder for the long term, and SBFC Finance, while showing healthy growth, will need to watch its asset quality more closely. The clear overall winner of Q1 fiscal year 2026 is India Shelter Finance. Thank you for watching. If you found this comparison useful, do not forget to like, share and subscribe for more quarterly result breakdowns. See you in the next video.